Hi everyone, what a day today. We got a massive gap higher overnight into the morning session here, and then we did try to dip down just a little bit and it could not hold at all. We ended up going higher into the end of the session, and it seems like the markets have digested this tariff news. It's gone from terrible to really, really good. We're going to see if this continues over the next couple days, and let's take a look at the charts and see what we think. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got the US-China trade deal pausing for 90 days. That seems to be their MO. They like to pause things for 90 days, but the goal here is to have a deal done by the end of that, and we've reduced those reciprocal tariffs by a lot, cutting from 125 down to 10%. The US 20% duties on China tariffs will remain until we see that fentanyl trafficking reduced, meaning that 30% now is the flat rate for China, which obviously is much better than the 140% that we'd been talking about. Huge markdown. And really the thing here is people weren't sure if we could even get a deal at all with China, if they were willing to have a discussion or if they were just going to continue to escalate with us. But then we had the meetings over the weekend. Supposedly there was a lot of progress, and now we have a pause, enough discussion to make people believe that there will be a deal. Again, it has not actually happened yet, but markets believe that it has, and we've priced that into the stock market, which means if this doesn't come to fruition, then it could be a major problem for markets. But for now, everyone seems to be content with believing this is going to hold up and that this will continue to improve over the next 90 days. And we saw all of the anti-recessionary plays doing better. Oil went up, again indicating greater economic activity, but they do say here there are still tariffs and this isn't all the way settled yet. Moving over to fear and greed, we finished at a 66 from a 61. Honestly, I expected this to be higher. We got above that 125 EMA, and this is still saying extreme fear. Wonder what's going on with that metric. Everything else here is doing really, really well. Again, same here for put call ratio. We're now at a 0.7. That should be at least neutral. It's really surprising to me. They're saying this is still fear. Volatility, neutral. Safe haven demand. This really needs to step up. That'll push higher into extreme greed over the last 20 days for sure. Junk bonds cratering here today, so that was good as well for bonds. Pretty much everything should be in greed or extreme greed with today's move, but so far that hasn't happened. Moving over to max pain, remember this is a third week options expiration. There is still a ton of options in the market. Put call ratio is still very high, and we are way at the top of the puts, way above this 575 level. We finished at 582, so we're above here. Way higher than I would have expected to get. We had a ton of puts, so I didn't expect to go too much lower, maybe into the kind of 560s to 565 area. But obviously today's move was not something that you could predict. And honestly, the market reaction was even stronger than I would have guessed given the news. Otherwise, moving over to the charts here, looking at the weekly just to give some perspective, we're up 3.3% on today's move, massive gap higher. Obviously, we got right to this kind of low consolidation in here from the beginning of January timeframe. We finished on the high. We are down just a few pennies after hours, but I guess this weekly momentum is going to carry through. We're clean through that RSI. This major trend line here was what we were watching all of the last 2 weeks, and we did get a huge gap through that level and continuation higher now. So let's go ahead and extend out this next potential trend line, which could give you a target really right back at those all-time highs. Are we going to get there? I think that remains to be seen. But structurally, this is back to bullish on every metric, in my opinion. With today's gap, you have to look at what markets are doing and play what you have, which of course means everything bullish. We did come back down and test the 578.87 level. That was the support based on the gap higher. The next target would be 585.91. We're kind of in the middle of this range here, so you could argue no clear direction from the middle of that range, but I would say definitely bullish. And you can see it here. Tons and tons of volume at the top of those levels. Massive gap higher, support, clean support, nice little rally off of it. We are super overbought as you would expect in the short term, but again, even if we pulled back a little, I would expect buyers to come in. Moving over to the Tasty charts here, looking at the weekly, the trailing stop here on that weekly chart is still up at 594.85. So this is still saying bearish conditions. Maybe that's where we're headed, 594.85, almost 595, touch that level, and then we see a rejection from from there potentially, but the trailing stop didn't go lower on these big lower candles. It's been flat since March, and we are still here now in the middle of May. So is this zone going to be the zone where we reject? It's still a possibility. Keep it in the back of your mind. I wouldn't say it's necessarily going to happen. Of course, every other metric is super bullish. And we're already at the top of that ATR band, pushed us right to the level 581.42. This was bullish conditions going into the day. Massive gap higher, trailing stop now on the daily is 550.29. Then moving over to the NASDAQ, same thesis, massive gap higher, about 4%. Again, closed right on the high of the candle. We're right at this low consolidation. Watching this zone here, are we going to get above that kind of 510 area? Momentum still swinging to bullish, RSI still swinging to bullish. This has been a hell of a retracement for sure. Can it continue back to the high of this consolidation, which would take us back to all-time highs? It's not impossible. I would have said it was impossible in here. I thought for sure this was going to be a really important turning point, but then we got that geopolitical risk to the upside pushing us much, much higher. And then looking at the levels here, you got 509.74 as your major resistance. We did have a turning point kind of middle of this range. 498.96 would have been the low of this trading range, but then we came in here, found support at the 9 EMA, and then pushed higher, and then held the 9 EMA the rest of the way, headed towards that 509 area. Above that, you got 523.24 as your next resistance. Again, dipping down just slightly after hours, but still holding up quite well. And then looking at that Tasty chart here for the weekly NASDAQ, you can see that weekly resistance is going to be 517.76. Nice, 1776. So that's the level that you would look to see. Are we going to reject from there, or are we going to close above it and get back into bullish conditions on the weekly chart? The weekly chart still says bearish, so you have to keep that in the back of your mind. It has not flipped bullish yet, but of course every other metric is bullish. All of the shorter time frames very much bullish, way above that upper ATR band. Typically this is not a zone where you would want to buy, but we are buying based off of the geopolitics. If this actually results in a deal within the next 90 days, markets are absolutely going to love that. And in my opinion, there's no reason that we couldn't go back up and at least test the all-time highs. Right now, your trailing stop on the daily is still bullish, like I said, but that is going to sit at 457.77. So a pretty substantial pullback would be required to put us back into bearish conditions on the daily chart. Then moving over here to the Russell and the Dow, you can see the Russell went up to 208.22. That was the next level. 205.07 was the support. Didn't quite test 207, 205.07. We did pull back almost there, and then we tested the high back here from this kind of 24-25 March time frame. And then we did close below the level. That's a little bit concerning, but the momentum still very much bullish. RSI very much bullish. We're so close to overbought conditions. My assumption at this point is that we are going to see overbought conditions before we see any kind of turning point. And then above there, you still have that 200, which is looming on the Russell. All of the other major indices are above it, but the Russell still has that overhead resistance at 216.34. And then you got the Dow also up 2.86%, gapped through the 200, gapped through this major trend line here. And then you got the 144 and the next level 426.20 as your next support, looking for that 432 area if we can get that continuation push, which based on everything here, momentum bullish, RSI bullish, you should be looking for that kind of a move. Moving over to the Mag 7. Mag 7 absolutely loved the move here as well, up over 5.5%. Momentum continues to carry. RSI continues to carry through. Pushed through that trend line, pushed through the 21 EMA, the next level 305.25, and your current support 296.73. We did come down, test that level, test the 21, test the trend, and found buyers at that level and then continued higher. We didn't close right on the high for the Mag 7. This is the weekly chart. Obviously, just today was the week, but overall, found support here, looking for that next level. And then looking at the day, you can see you gapped through the 200. This was the zone where we were waiting to see if we got through it or not. I honestly believed we were going to get the rejection from here, but geopolitics, tweets, momentum, RSI, everything is bullish. We're back above all the EMAs and SMAs, which is bullish conditions. Moving over to Apple and Microsoft, both of these having great days, as you would suspect. Apple was up 6.18%. I expected them to outperform based on this news, and sure enough, they did. Momentum bullish, RSI bullish. Came down, tested 207.14, held support there, rallied right back to 211.55. Not as structurally bullish as everything else. You can see 55 EMA resistance, 200 SMA still resistance, but I would suspect we're at least going to get to that 55 at 213. Next level would be 217 and then 224 up in here. highly traded zone in there as well. If this deal holds, Apple should be in good shape. They depend heavily on iPhone sales in China. And then looking at Microsoft, this is just a hair off of all-time highs now with today's move. Massive earnings, massive outperformance. Microsoft continues to outperform. The next level is 453.30 with the gap through that 440 level, came down, retested it, continued to hold support there, and then push towards that 453. The next level above that is your all-time high in this kind of 466.57 area. So watching for that back in here. Can we continue through? I suspect that we can. We are super overbought. Do keep that in mind. You're at a 75.24 on overbought conditions for the RSI, but based on geopolitics, this can absolutely go. Moving over to Tesla and NVDA, you got Tesla going up 6.75%. Again, very dependent on this Chinese market. Momentum, super bullish. RSI, super bullish. NVIDIA similarly, not as much, but similarly dependent on the Chinese market for a lot of revenue, massive gap higher, pushing towards that 142.69 level. We said as long as 116.70 held, we should be in good shape. And the close of the Friday was right at that level, 116.65. So you could argue that was a hold. We technically closed below it, but obviously ended up being support, and we did get that massive continuation higher towards that 200 at 125.02. Moving over to staples versus discretionary. Staples was positive just barely, but really unchanged. We've been in the same region for a while. It's kind of in the middle of the trading range right now with no clear direction. And so far it has stayed there this week. We did test support at 80.54, so maybe you bought a little bit in there, but momentum fading slightly, RSI kind of neutral, no clear direction. And then looking at discretionaries, of course, got the massive gap higher, up almost 5%. Did come back, did test the 21, did test the level here, 210.43. And then looking at that daily chart here, you can see we gapped cleanly through the 200. Pushed through that 144. We're back above all the EMAs and SMAs. You got this trend is overhead resistance around 216, and then 215.06 is your next resistance here. Again, momentum super bullish, RSI almost overbought. Then moving over to breadth, 20-day breadth continues to hold in this overbought condition right in this 68 to 86 area. This is our third week in this area. That is pretty uncommon. You don't get to hang out here very long, very often. You can see in here back in November into January of 23 into 24, we hung out there for a long time after hitting a very deep market low, held in there and then rallied for a while, but then eventually you did get a sell. So week 3, is this the peak week? We'll see. Of course, geopolitics says we should continue higher. And then looking at 50-day, gap through a lot of levels here, 62 and the 68 level. The next one is 77.50. We've broken this structure cleanly. I thought we might reject here, but we ended up not doing that. Momentum back to bullish, and we are overbought. We are broken out from this previous high now as well. So you got a high, higher high. And based on this structure here, you should be looking for a push into this kind of 83, 84 area. And then that is where markets typically top out, but you can hang in here for a while. You can see you got here in kind of mid-September, and then we left early October. So a couple of weeks of price action, and you could argue realistically that you got here in August and didn't really leave until October last year. So you can spend a long time in this area without getting the same kind of turning point that you see on that 20-day. Moving over to bonds, bond yields had a massive move here, 2-year and 10-year having huge legs up. 2-year back above that 4 level, 10-year headed towards 4.5. Interesting to see this reaction. This is not what I would have expected. So a Chinese deal should bring inflation down, less tariffs, better market dynamics. But it seems like that is being outweighed by the idea that more economic activity means we're not going to get cuts from the Fed, which means ultimately these yields are going to stay higher for longer potentially. And that seems to be the prevailing thesis, at least in my opinion, for yields. Then moving over here to the dollar. The dollar, of course, went up massively through the session, broke well above that 101.25 level, clean breakout, barely even pulled back, pushed clean through there, almost up to the next level, 102, through wicks to that level, saw a little bit of selling momentum fading just slightly there on the hourly, but of course, we were super overbought. That was your next resistance if 102.25 broke, and it did. The trend line broke as well. So above that, you got the 55 EMA at 102.42. So watch out for that as your next resistance. Momentum bullish, RSI still bullish. Moving over to bonds with JNK and TLT. You got JNK up massive. Again, this is more of an economic indicator. If the economy is strong, JNK should be going higher. And sure enough, it did. TLT, on the other hand, selling off almost back to the level 85.90. Is this going to be strong enough to push us back down to the lows here? around this 82.50 area. I think I'm going to be patient here. If we dip too far below 85.90, I'm definitely going to buy some government bonds in here. That's a nice yield for the long term that you can get, that you could lock in at these levels. Maybe we dip a little bit closer to 84.90, this low back here from January, but anywhere below 85.90 I think is a good opportunity for TLT. Realistically, I still believe this is going to go back towards the 100 level over the next several months. Moving over to the VIX, we got the VIX cratering as you would expect, down 16%, broke clean through the 20 level, did retest that level and then sold some more back through the 1850 level. At this point, the next zone would be this kind of 17 to 15 consolidation range. We'll see if it goes there. Let's extend out this trend line. I didn't think this would be in play anywhere near this soon, but it is. Your next trend support could be in here around 16.5. Momentum bearish, RSI bearish. Moving over to my accounts, of course, I was short the 5-10 calls out to what was 42 days from now going into the weekend. So of course I got squeezed on that, lost some money there, which was a little bit frustrating. I did not expect the rally to be super strong. I thought the 200 would be pretty powerful. I thought the news would be a little bit less powerful, but of course that was not the case. Otherwise, I did add some shares and turn this into a long dated covered call, and I did roll it down actually to 505. So that is $14.50 credit. Bought the shares here at 503.76. So actually got a pretty good entry. Nice little profit on those. And I'm going to be patient here. So the actual max profit would be 520 on this, just a little bit less, 519.50, which would be totally fine over the next month or so. I don't necessarily know if I'm going to hold it that long, but for right now, you just have to play the bullish market. Everything seems to be pointing to higher, even some of those concerning metrics that we talked about. But for now, everything is bullish. I even put the Russell shares back on. 208 call for tomorrow for $1.36 credit. Bought the shares really right at the end of the session. It's actually down a little bit in the after hours, but holding that 208. Going to try to collect a little bit on that. If it starts to break levels, I'll take it off. But for now, it seems like markets only want to go higher, and even the short-term small pullbacks do get bought up. So right now, bullish thesis going into tomorrow. Let me know down in the comment section what you thought of the markets today. Did they do what you thought they would with the massive gap higher? Was the China news as substantive as you thought it could be? Or did you expect more based on the rally? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.